Determine trend lines or trends. Welcome to the second lecture of the course and secrets of binary options trading. Today's lecture we will explain to you how to draw trend lines correctly. To know how to take confirmed trading deals with the right direction, you must determine the general direction of the market and ask yourself a question. Is the market now bullish or bearish? You begin to determine the direction and draw trend lines. In this video, we will learn how to draw a trend line from the beginning of its formation, whether an uptrend or a downtrend. I will also teach you a secret trading strategy using the trend. Entering guaranteed deals with momentum or momentum using candlestick patterns. There are three types of trends, number 1 being the rising trend, number 2 of the downward trend, trend number 3 consolidation. We will now talk about the rising trend. After you draw the support and resistance areas correctly, as we are accustomed to drawing them in the first lecture. If you haven't watched the first lecture, you should watch it first. First, go to the largest time frame. It is the 4-hour frame. If you find the general trend rising like this, you start drawing the trend line or trend area from the first two bottoms from which the trend started. This is how I drew the first line. Then you get another line and start drawing it on the closest bounce from which the price has reversed. You have drawn the trend line correctly, and you start looking for trades that are only going up, because you are walking with the general trend of the market and not against the trend. The beginning of the rising trend and its conditions. The price begins to rise, making a higher peak than the previous peak, and it creates a bottom for you. If the price falls again, you wait for the second bottom to form as soon as it is formed. Then, you notice a clear retracement in the formation of the candle itself or the psychology of the candle. You wait for any reversal pattern, which we will talk about in the upcoming lectures. Once this pattern is formed, you can then open a deal, but for a slightly longer period, and this will be your correct entry point. You take into consideration that the price will rise and make a higher peak than the previous peak. The second type with us is the downtrend. You start drawing a trend line on the highs and not the lows. From the two highest peaks the price reached, meaning from the tail area. Then you get another trend line and start drawing at the nearest retracement from which the price reversed. This is how you drew the entire trend area. Your goal will be to open your trades with the downward trend, the beginning of the downtrend and its conditions. The price begins to fall, making a bottom lower than the previous bottom, and he will make you a summit. If the price rises again, you will wait for the second peak to occur. Once a new high is formed, then a clear retracement will follow in the formation of the candle itself. You are waiting for a reversal pattern. Once the pattern is formed, you can open your deal. Its duration will be a little longer and this will be the correct entry point. And keep in mind that the price will fall again and make a lower bottom than the previous one. The last type with us is the consolidation trend. It will be a cross-section area where the price will be confined. It relies on drawing support and resistance areas and draws the resistance area from the highest peak, as we are accustomed to drawing them before. You start drawing the resistance area from the highest peak reached by the price and the lowest low reached by the price. It will create an occasional trend and you can rely on it. The last type with us is the consolidation trend. It will be a cross-section area where the price will be confined. It relies on drawing support and resistance areas and draws the resistance area from the highest peak, as we are accustomed to drawing them before. You start drawing the resistance area from the highest peak reached by the price and the lowest low reached by the price. It will create an occasional trend and you can rely on it. The most famous trend that is constantly present is the supply trend, and it is useful to rely on it normally and its deals will be excellent. But in order to be able to draw the trend clearly, provided that you draw it in a time frame of a quarter of an hour or 5 minutes, to be able to differentiate between a false fracture and a true fracture, because if you draw it on the minute time frame, it will be very difficult to determine whether this break is a real break or an imaginary break, because you may simply be waiting for the deal to open from the entry point that we agreed upon, and after that you will find a sudden strong entry from the opposite force. He starts to make you think that he will break the trend. As soon as it interferes with the opposing force, a surprise occurs. The price is rising again and strongly. You will be surprised that this was an imaginary fracture. if we assume that the trend is up and the price comes back down to create a new bottom. At that time, you will be waiting for the buyers to enter because this is their area and the shock will happen. That is, you are experiencing unprecedented entry from sellers. Contrary to what you expected, you begin to doubt your analysis. If you are on a time frame for a minute, you will find strength and it will close below the line by petals or 4 candles. And then you say to yourself, this is a real break. But if you go back to the 5-minute or quarter-hour time frame, you will find all of these candles formed in the tail of the candle only. It's not a real break or anything, or it will be an imaginary fracture. At this moment, a strong entry may occur for buyers, and then it may occur and return to respect the trend area and continue in the direction it was in, which is the upward trend. Therefore, I advise you to use technical analysis on the large time frame, whether 5 minutes or a quarter of an hour. Thanks for watching.